Oh my gosh. Can you guys hear me? All right. Can you see my screen? Okay. All right. Hang on. Let me guys, so there's a giveaway that I'm going to be doing. It's a 50K account to Funded Futures Network. When you go in, got to click on the on the bottom where it says like email or whatever. You got to log in to that in order for you to get an entry, and then each activity that you like click on, it counts as an entry. I think there's only like, let me see how many people have by now. Not very many. Looks like only 7 people entered it, guys. It's a pretty big um, chance for you to win. So you don't have to buy anything, obviously. Okay. All right. Okie dokie. I'll go ahead and get started. For those of you that want to follow along, this is called propfirmtrend.com. And you go into trading resources. All of this is free. You go to trading resources and then click on start learning, which is the futures basics. How many of you are brand new to like futures trading? And is there something specific that you guys would like me to go over instead of like the same webinar that we, and I'm talking about specifically about futures basics. I'm not talking about technical analysis or anything like that, because that's a different stream. Or I'll just go ahead and do my webinar like I always do, and then we started in May of this year with futures. Okay. Let's see others. Like a lot of people just kind of hang on. What every time you log on to the link, it's asking you to purchase. What's asking you to purchase? Here's the link. These 57 entries means just each activity. There's like 7 or 8 people that entered. This here, is that what you're talking about? You don't need to, I'm talking about this down on the bottom. See how it says login? Okay. Yeah, all the way on the bottom, guys, where it says login. This is just their website. But it tells you like kind of what, you know, what they've got going on right now, and it ends today. Yeah, so on the bottom, then it says like it'll automatically enter you as soon as you like log in, but then there's other entries that you can do that will give you the, or activities that it will give you the entry. So like right now it says 57. Let me refresh. See, now it says 70. So more people, you know, just some people have like 8 entries because they do all of the little activities. Some just have 1. I mean, it's up to you. It's not a, and then I'll do the drawing at the end. Okay. Okay, sounds good. All right, so let's see. Next question. Can you chat a little bit about the difference cadence between ES and NQ? Should people start with ES, NQ, a different ticker? All right, sounds good, AJ. Do you want me to answer that question now, Concord, or should I do it at the end, towards the end? Because I can kind of go through a little bit of this, and then just for those that need a refresher, even though some of you have been in futures, I still get the same questions asked, whether it's through DMs, and maybe it takes a couple of times to go through whenever it makes sense in my presentation. You're a slow learner. Okay, yeah, you are. I'm just kidding. So if you've been through this before, it's always good to brush up on your skills. Some of you have never been through the fundamentals. Some of you just kind of hop in and hop out. Because yes, I get it. It's boring. It's not something that you know, people like to do. Sit through a boring webinar. But once you understand a lot of the fundamentals and you start to apply that, especially when I start, you know, when I go over the risk management and things like that, then it will start to click in where you're, you know, being profitable isn't just finding technical analysis strategies. Being profitable is also picking the right instrument to trade with your, you know, skill set, risk management, you know, things like that. Okay. All right, Concord. I'll go over that in a little bit. I'll fit it into my. So, any other questions you guys can ask? I will answer any and all questions probably towards the end. I don't usually like to stop the stream or webinar to answer questions because then I get off track. Tommy, okay, so somebody said, I heard once that Enki is the girlfriend you want to bring home to mom, and ES is the one you should bring home to mom. Yeah, I've heard the saying NQ is the mistress and ES is the wife. You know, it just depends. All righty, let's see. Okay, I'll do that in just a second. Sorry guys, I'm on like 5 or 6 different streams, so I'm reading questions from different places. Alrighty, let me now I gotta find where my streaming is so I can click the next button. Okay, there we go. All right, so what are futures? So some of you have been through this before, some of you have not. This is just the fundamentals of it. And like I said, I'll answer all the questions at the end. But, what are futures? So futures trading is a contract between a buyer looking to invest and a seller where the contract is made for the future and has an expiration date. There are two participants. There are hedgers and speculators. Hedgers protect their assets from risks, and speculators are usually floor traders. So as retail traders, we are considered speculators. So futures contracts are available in different assets such as equity index futures, interest rate futures, commodity futures, currency futures, metal futures, and they all have expiration dates. Your broker, whatever you're trading with, NinjaTrader, Tradeovate, AMP, they will automatically prompt you to roll over, as you can see in the example down here. But equity index futures, they typically expire on a third Friday of every third month. S&P 500 expires quarterly. So it's March, June, September, and December, and so does NASDAQ. Interest rate futures, commodity futures such as oil, currency futures, metal futures, like gold and silver, they are monthly expirations. So they will expire monthly. So the purpose is to teach some of the fundamentals of how futures work, how you can trade them on your own account, and how you can get a funded futures prop firm account, since I believe that many would benefit from adding futures trading to their skill set. So some of the key terminologies, I'm not going to go over all of this. You guys can always visit this website and just, go back through this. But some of the key terminologies are going to be like lot or contract, which is unit of the instrument. Tick is the smallest price movement that a futures contract can make. Point is a $1 move or one handle. Globex is an electronic trading platform used for derivative futures and commodity contracts, but traders also use the term Globex to mean overnight session of the market. So RTH is the regular trading hours. Obviously, margin is the amount of money that you require to be deposited by a trader. So first off, the market is essentially futures, and we frequently discuss ES. So the S&P 500 futures are those. So although these futures are traded similarly to other derivatives, leverage is what they offer above all else. Futures trading is simply a very leveraged form of stock trading. So to contrast with futures, an E-mini S&P 500 contract offers roughly 32 to 1 leverage. And because ES trades in ticks, which is a 0.25 spread, one contract changes value by $12.50 for every 0.25 it moves. You gain or lose $50 when ES moves 1 point. So for example, one ES changes by 10 points, you either win or lose $500. Most often in using futures, ES, MES is basically like SPX and SPY. NQ, MNQ is NDX and QQQ. CL is for oil, GC is for gold, but these trade in a manner more akin to shares than options because there's no theta, no IV, stop losses can be placed at precise price points, and each futures contract has its own specification, including the size of the contract, the tick size, which is that minimum price movement, and the delivery date. Now, micro E-minis are 1/10 as small as E-mini contracts of the same type. So to provide an example, the S&P 500 micro E-mini utilizes a $5 multiplier, whereas the E-mini version, which is the bigger size, employs a $50 multiplier. So I just talked a little bit about ES. We're going to talk about NQ. So one NQ changes value by $5 per tick or $20 per point. However, the micro version changes 50 cents per tick or $2 per point. Now, to kind of give you a contrast, so there are 4 ticks in each point when it comes to ES and NQ. But if you're trading, let's just say oil, one mini changes value by $10 per tick or $10 per 1 cent. And each penny is a tick worth $10. And it's $1,000 per point. So when I first started trading oil, back when so I used to trade options, and 3.5 years ago, I moved over to trading futures. So when I started trading futures at the time, there weren't very many people trading futures. Most everyone I knew was trading either small penny stocks or options, and so a lot of it was trial and error. And I took a trade, I remember, in oil, and I was down $80. As soon as like I got in, I'm down $80, and I'm like, what the heck? This is a glitch because it hasn't even moved. And I didn't realize that each um, penny or each 1 cent move was a $10 worth of the profit or loss. So there are 100 ticks in 1 point on oil, meaning that if oil is trading at $60 and it goes to $61, that $1 move is $1,000 per point on your contract. So as you can see, not all futures have, the same amount of ticks in each point. And same thing with their micros. It's just 1/10. Okay. Let's see. So what I see happening is that many new traders jump straight into NQ or ES, thinking they're just trading futures when the risk is equivalent to trading the full index value. So they don't realize that trading NQ is like trading NDX. Trading ES is more like trading SPX. When, most traders should be trading MNQ instead, which is like trading QQQ, or should be trading MES instead, which is like trading SPY. Um, Bottom line is you don't want to trade NQ, and your account size says you should be trading MNQ. And this is about 90% of the time how people blow their accounts, is because they don't know how to size in. They're going straight for NQ and ES instead of the micro version of it. So maybe this is a good place, Concord, that I actually kind of explain, I suppose, what the difference is between them. So when you're trading NQ, it is more volatile. It's tech heavy. It's NASDAQ. So a 1% move in ES, for example, might be, I don't know, 1.5% move in NQ or 2% move in NQ on the same day. ES is typically smoother. There is more liquidity with ES, so it tends to have more predictable, moves, since it represents, like 500 companies, which is the S&P 500. NQ can be more choppy, or or like a more of a trap. I guess I'm trying to figure out the words to use, but especially like when there's tech earnings, or there's some news, a catalyst that comes out, let's say about, I don't know, Nvidia or Microsoft. The question he asked was, should beginners start with ES or NQ? Most of the time, I personally would say start with ES. I also started with ES when I started trading, or MES, because it's less volatile. Mistakes are less, they're not as severe as NQ or NASDAQ. And typically the moves are a little bit more readable when you're learning price action. So I don't know. I traded S&P 500 or ES, MES for a long time before switching over to NASDAQ. And the first few times I tried, I actually went in with NQ instead of, the micros. And I was like, this is insane, because as soon as I got in, I legit just got chopped up and had losses, because I didn't understand the price action of it. And like I said, size down, use micros. You can get stopped out faster if you're trading NQ, if your strategy is not really good. So you have to be careful with position sizing. If anything, I would say, you know, for any account, whatever, if you're, especially if you're a beginner with futures, play on a sim account, play on a practice account with both ES, MES, NQ, MNQ. However, be careful playing with even on a practice account with ES or NQ, because it's going to give you a dopamine hit, and you're always going to want to, for the same move that you had on MNQ, when you see the profit on NQ, you're going to want to have that same hit. So however you are going to trade, when you are trading, whether it's your own personal account, whether you're a prop firm trader, that's what you should be playing with as well on a practice account, so that your habits don't move over to the real accounts. Okay. Let's see. Okay. Let me go ahead and so one thing with futures, futures market is open 23 hours a day. Typically, you must close out your positions by 4:59 p.m. if you're trading on like funded prop accounts. They opens on Sundays at 6 p.m. Eastern, closes Friday at 4:59 p.m. Eastern. And best times to trade are typically during the New York Stock Exchange open or during the European markets, which is in the middle of the night. You also want to check with your prop firm during the holidays, as the hours may vary. So today, for example, some prop firms are closing like in a few minutes at 12:45 Eastern. Some are closing at 2 p.m. Eastern, depending upon which platform they're using, whether it's Project X or whether it's Rhythmic or Tradeovate. So um, also, futures were open yesterday until um, 1 p.m. Eastern, or was it 2 p.m. Eastern? I didn't trade yesterday. But either way, and then it reopened back up last night at 6 p.m. and it's closing again. So it's going to open back up on Sunday. So you just want to like look at the each firm that you're trading with. Make sure you're out of the positions by that time. So this right here is a little bit of it's a comprehensive futures contract specification. So it's kind of like a little cheat sheet you can come back to and look at. S&P 500 ES, it moves in 0.25 ticks at $12.50. The micro version of it is right below. This is what gold is moving at if you're trading oil. So it's kind of the minimum tick, the dollar amount per tick, the futures and ticker. So basically, the distinction when you purchase or sell a contract with futures, you're not purchasing ES shares. So it costs the same amount of money to buy or sell one contract, regardless of the price of which ES is trading. And margin is the term for that. So here, there are different ways of starting to trade futures, whether you're funding your own account with your own capital. So this here, is like if you're going with a traditional broker, such as Interactive Broker or TOS, you can trade micros, which cost roughly about like $2,300 for an MES lot and about $23,000 for one ES lot. You also want to check with your broker how much capital you would need. And this is for initial balance, and I'll explain what the difference between the two are. Another way you can trade is if you fund your own broker that specializes in futures, such as NinjaTrader or Tradeovate. AMP is one of them. So instead of $23,000 for the traditional broker, there are firms that offer $500 to $1,000 day trading margin for E-mini contracts. And micro contracts are even more affordable, which is like, I think MES costs only $50 day trading margin. MNQ costs about $100. And like I said, this is for day trade margin only. Overnight, or if you're a swing trader, then those require the full margin. Okay. Also, NinjaTrader owns Tradeovate, so you can fund NinjaTrader and use the money on Tradeovate platform. You can also, like for example, I use NinjaTrader and I can connect my live accounts with my different prop firm accounts, all to trade together with a trade copier. This right here is the margin requirement. So initial margin is this side or this column, and then the day trade margin is here. So basically, if you're trading ES with, like I said, Interactive Broker, and you want to swing, let's say it's a Friday, you want to swing your position overnight or over the weekend, for one NQ, it's $33,000 for one lot. And same thing with Tradeovate and NinjaTrader. So if you're, for swing trading, you need to have the initial margin. For day trade margin, on Tradeovate and NinjaTrader, it's $1,000 for NQ and $500 for ES. However, if you see the micro versions, it's $50 per contract on MES or $100 on MNQ. So what does, the day trading margin mean? Basically, Tradeovate offers reduced margins for both the day session as well as the overnight session. Reduced intraday margins are currently available from 6 p.m. Eastern until 4:45 p.m. Eastern the following day. So technically, you can hold the position with the day trade margin for almost 23 hours. But if you want to hold the position between 4:45 p.m. Eastern until 6 p.m. Eastern, so if you're holding that, that's called close of the market, then you would need this initial margin. Okay, so that's kind of what the difference is. As a scalper and as a day trader, I don't need to hold I can close my position at 4:45 p.m. and reopen it back up at 6 p.m. And that's totally fine. Yes, there's sometimes a gap up, but I'm okay with that. I can just utilize my day margin instead of the initial full margin. Okay. And typically you would need like an account minimum is about $250 to open a Tradeovate account, which is one of the lowest in the industry. Okay. Third way is a prop firm. Okay, so you can utilize a finance partner, also known as Tradeify, Apex Trader Funding, Take Profit Trader, the Futures Desk, Top Step, My Fund of Futures. There are so many others, and they all have different rules. So, for example, Tradeify has a 1-day pass. Top Step has a 2-day minimum evaluation, where you can be funded in as little as 2 days. Take Profit Trader has a 5-day pass, and basically, what you would do, how this works, is you demonstrate to the prop firm that you're a successful trader. You must pay to enter the evaluation, which is a SIM. If you succeed, you will then be given a funded account to trade with, and you pay the activation fee. So some firms don't even have activation fees. It just depends on the account and the prop firm. This right here is from Apex, but basically you keep all of the proceeds up to $25,000. And then you keep 90% of the profit after the first $25,000 you earn, while they keep 10%. So you want to see also, like I said, the prop firm rules, whatever firm you're utilizing. Some people get multiple accounts when it's on discount, so they can trade them at the same time. There is a trade copier you can use, and each account must pass the performance evaluation on its own, as they're all standalone accounts. Now, is this too good to be true? Not really. Most traders fail due to lack of discipline. And this is how these companies make money. In fact, 95% of traders, or 90% of traders, depends which statistic you look at, fail, whether they're trading options, crypto, equities, futures with their own money, with their grandma's money, with prop firms. It doesn't matter. The statistics are in the favor of the prop firm or the um, prop firm. And unfortunately, that's kind of the business model. So, and it's not because they created that, it's because that's just how the industry is. So, there are people, if you can trade the chart, such as, trade the price action, stay disciplined, consistent, then you're going to make money and you're going to pull money out. There are many people that have withdrawn money, whether it's from, from their own, obviously from their own accounts or prop firms, but they're also consistent. So, the worst that can happen is you lose your account evaluation fee. You do not pay back any capital. So you can also take these evaluations as many times. It isn't just once and that's it. And first, if you just want to test it out, although they have, tighter regulations, I would say you're essentially forced to have good habits by the rules, would be, to utilize a prop firm, because the challenge fee, again, it depends which firm, can be anywhere from like actually some of them have it at $15, like 15 to $100 for, a 50K account. And, while you're testing it out, I'd rather lose $50 than lose $5,000 trying to learn how to trade futures. That's just, you know, my years of one of my years of trading options, I lost over 220 grand of my own money. And I can assure you, if I knew of prop firms at the time, it wouldn't have been that. So, the question is why prop firm versus trading your own money? Simply put, this here is from Take Profit Trader, but simply put, most traders are undercapitalized. You level the playing field by using their accounts, not your own funds. Trading your own accounts can lead to severe losses. However, the prop firms, your losses are limited to the associated challenge fee. All technology and account setup is done by them. There's no documentation, or any extra like painful account setup experiences. The data is provided by them, the keys to the platforms. So also lack of discipline haunts traders. So the risk management system and rules will make sure that you stay disciplined during your trades. Okay, so this here, I'm going to actually pull up a few firms just to kind of show you guys what this kind of, because this is going to be important in which firm you choose. Let's go to Apex Trader Funding. Trade. So notice how there's different plans, like there's Wealth Charts plan, there's Rhythmic, there's Tradeovate. So I trade with NinjaTrader, so I would pick the Tradeovate plan. Although even Rhythmic would work for NinjaTrader, but a lot of people go with the Tradeovate. So let's just say, where is there? Okay, so 100K account. So right now they've got like their 100K account is $59 and then a $10 activation fee. I think it either expires today or tomorrow. I'm not 100% sure. I'll check on that. But the goal for this is, your profit goal is $6,000. You do not have to pass. They do have a 1-day pass, but you do not have to pass it in 1 day. So the promo right now is the 1 day. And then your trailing threshold is $3,000, and it's an intraday trailing. Okay. For the 50K account, notice the profit goal is 3,000, trailing threshold is 2,500. If you go to Tradeify, notice up here there's two different types of accounts. This growth is an evaluation account. For a 50K account, it's $83. This includes activation fee. So all in would be $83, once you pass. 1 day to pass. But, and this is an end of day drawdown, okay? If you go to Lightning Funded, so there is something that is, instead of going through an evaluation, which is like the growth account, they have what's called a Lightning to Funded or straight to funded SIM. What that means is that whatever you make in these accounts, you're basically like, if let's say you buy, I don't know, 50K account, you are basically SIM funded. So anything that you make in this, you get to keep at 90%. Drawdown mode is end of day. Consistency is 20%. Futures Desk has something called, they have a little bit of different plans, but they have a static account, which is probably one of my favorite ones. And you're also able to customize your plans. So if you want, equivalent of like a 200K account, where your drawdown is $6,000, or, you can have a different drawdown, whatever it is. So you can customize it, but they also have an end of day trailing. Static is what I'm going to talk. So I'm going to talk about these three different types of drawdowns. So intraday trailing, your drawdown limit moves up with your balance and unrealized gains throughout the day, but resets to the daily trading starting balance each day. So for example, 50K account with a 3K drawdown. So your day starts at 3,000 or 50,000. Your drawdown, let's say it's 47,000. So let's say at 10 a.m. you make a $500 profit, which ends up being at 50,500. Your drawdown now moves to 47,500. So let's say at 11 a.m. you make another $300. Your drawdown is at 50,800. So your drawdown moves, to 47,800. At 1 p.m., you open a position with $600 unrealized gains. So now you're up at 51,400 unrealized. Your drawdown moves to $48,400, and because it trails unrealized gains. 2 p.m. you close your position for $400 realized profit. Your drawdown is going to stay at 48,400. It's not going to go down. So from 3 p.m. Let's just say at 3 p.m. you lose $400. Now your balance is at 50,800. Your drawdown is still going to stay at 48,400. Remaining drawdown is $2,400. So the next day your account resets to 50,800. You have a $2,400 available drawdown. This is more for people that take base hits or scalpers. So, if you are someone that doesn't watch their position go up 1,000 and then you sit there and you wait for it to go back down to whether it's a break even or a loss, and you take your profits, then intraday trailing is going to be fine. Note that once you get funded, all of these accounts will become static, and that is after whatever your drawdown amount is plus $100. So in this instance, for example, once you're funded and you go over 53,000, which is the 3K plus $100. So if you go up to 60,000, 70,000, your drawdown is static. So it does not go below, the it stopped. So you can lose $10,000, for example, if you're at 70,000 and still keep your account. So they do become static. End of day trailing. So your drawdown limit only moves up based on your ending balance at the close of each trading day. 50K account, 3K drawdown. Day one, you start at 50,000, drawdown is 47,000. Total drawdown available is 3,000. During the day, you're up at 51,500, then down to 50,800. Your drawdown is going to stay at $47,000 all day. Total drawdown available is 3,000. It stays fixed all day. So day one closes at 50,800. Your drawdown updates to 47,800. So now the total drawdown available is 3,000. This is for those that hold, you want to hold your position. I don't know. I don't want to say all day, but like, yeah, if you are more of a person that holds their position, that will wait for that profit, take profit area or whatever it is, and those that also let their profits go up 1,000 and watch them go back down, 1,000 or break even, then end of day trailing is for you. Static is my favorite. Some firms offer it. Some firms are better than others. So, for example, like the futures desk, they have up to $6,000 static drawdown. And basically, your drawdown limit is fixed based on the starting balance and it never changes. Now, these accounts also become static once you get to the funded, stage. Okay. So, for example, you start with a 50K account, it's a 6%. Account starts 50,000. Drawdown is 47,000. Week one, you grow to 55,000. Your drawdown stays at 47,000. Month one, let's say your account grows to 60,000. Your drawdown is still going to be at 47,000. Month six, your account is 75,000. Your drawdown is still at 47,000. Now, reality check, you can lose $28,000 and still breach the account. And this one mimics more of your own personal account. So it's not many firms offer it, but the ones that do, you want to see what the amount is of the static drawdown, because they all vary. So let's see. All right, so here you guys can kind of check out different, evaluation rules, payout rules, profit split, that kind of stuff between the different, firms. If so notice, with Tradeify, they've got that Lightning account, which is 0 minimum days because you're already funded. But if you do the, I need to update this. If you do the growth account, it's at least a 1-day pass. Now, you do not have to pass it in 1 day. Like I said, you can pass it in 20 days. You can pass it in, 15 days, whatever it is. You technically should take your time to pass these because you don't want to try to make all the profit in 1 day. And then once you get funded, you need to have more of a consistency. Okay. But Take Profit Trader, for example, has a 5-day minimum. And what that means is that your evaluation can be, and this is just during the evaluation, is 5 days. There's also a 50% consistency. And again, just in the evaluation phase. However, once you pass and once you get into the pro account, then you can withdraw your money daily, which is so it's a daily where you can withdraw once you are over the threshold amount. Now, what does this 50% consistency test mean? Well, let's go through a calculator. Consistency. So let's say Take Profit Trader has a 50K account. Your overall profit needs to be 3,000 for to meet the profit target. If you make $1,500 in 1 day, you're going to be fine because it's 50% or less. Okay. So let's say for Take Profit Trader, you make $1,500 today, $1,500 tomorrow. That's, the overall total profit, but you need 3 more days to trade. So what you can do at that point is go in and just flip a micro account for each day. So for each, day, just go in, flip it. As long as, it just on your account, which is kind of weird, but whatever. You made a transaction, then for the remaining 3 days, then you will be just fine. If you, let's say you made $1,000, then your consistency is 33, so it's even better. So basically, they just don't want people to make in one day, if you make $3,000, then that's going to be 100%. So you would then need to make $6,000 to get this under 50%. A lot of some firms have this during the evaluation. Others have it once you're funded, but not during the evaluation. So you got to read the rules and see which firm offers what. Also here, you guys, you can add different prop firms. So I know people talk about Top Step. Let's say we get a 50K account, end of day trailing, profit is 3,000. Say Tradeify, 50K, they have a 40, oops. Include activation. Same thing, profit target is the same. Profit target is 6 or 3,000. End of day is 2,000 for both. After discount with Tradeify, it's $83.40. With Top Step, it's $198. Actually, I think Top Step did make a little bit of changes for their rules, where it's like it costs more for the evaluation and less for an activation or no activation fee. But you can go in and kind of compare the prices. You can even compare multi-firm comparison, but you can compare the same accounts or from the same firm, different sizes of accounts, for example. So let's see. So it's going to tell you which value is best. As far as the dollar amount, obviously it's going to be $83, but you also get more of a drawdown, with the 100K account compared to the 50K account. So just kind of, see this is kind of subjective, I suppose, in a way, as far as like what you value. But also, guys, so this here, another way you could compare some of these firms is click on the detailed analysis. Let's say you just want to get let's say just static accounts. It'll pull up all of the firms that have the static accounts. So notice like Tradeify is not on here, Take Profit Trader is not on here, Top Step is not on here because they don't offer those. But these other ones do. And then you can kind of go, to the right, and it will tell you about, minimum evaluation days, what the scaling is, how many platform or what kind of platforms. You can also click on, okay, so full details to give you an example. This is more of a condensed version of the prop firm and kind of what they offer. So like the futures desk, they have obviously 0 activation fees, 0 subscription. And once you are in their live account, you can withdraw daily. It's uncapped payouts once you're live. Minimum to withdraw is $100. So you can compare that with another firm, and then you can also visit their website, kind of tell you and take you over there. Let's see. There's a lot of Black Friday deals. A lot of them are ending tonight or today. So you can kind of check with these. Like for example, take Profit Trader. They have a 30% off for life plus no activation fee. And if you pass without a reset or a rebill, then you get a pro account basically for free because they're going to refund you the activation or not the evaluation fee. So Apex has 80% off, or if you're doing the 100K special, it's $69 for all. It's $59 for the evaluation and then $10 for the lifetime funded. Okay. And also Apex allows you to have up to 20 accounts. That's the only firm that offers, that allows that. So you can basically trade copy 20 accounts. I don't suggest that for anybody that's brand new, because if you have a loss in all of your accounts, clearly you're going to have a loss in, or one account, you're going to have a loss in all of your accounts. However, if you yes, if you have a green day, it's going to be green across your accounts, but take your time with passing evaluations, get familiar with it, and then, once you get a payout, then you can scale in. It's obviously up to you. Some of them have 90% off. This one here ends today. It's a pretty good one, actually. It's you buy one, you get one free and no activation fee. That's for the Funded Futures Network. I'll be giving away an account today with them. So just kind of check what their deals are if you are looking to get in. Okay, so let me start talking a little bit about the psychology and the risk management part. Okay, so let's say you're feeling greedy and vengeful. It will tell you, so this is, this is an honest self-assessment that you would take, and basically if you're feeling like this, it's going to tell you you're at a high risk state, consider not trading, reducing exposure, taking a break, whatever it is, right? So next is basically a cognitive bias checkpoint. You gotta, awareness is the first step to basically neutralize. Like if I'm sitting here and I'm thinking of the herd mentality, you're following the crowd without analysis. Put that in there, and then what you sized in. So this is kind of like prior to your trades. So let's say we're going to talk about MNQ. Let's say you have a 50K account, which is technically a $2,000 drawdown. Typically, you shouldn't be risking more than 2 to 3% per position. And it'll tell you how to size in. So let's say, I don't know, NQ is at 25,000, and we're going to risk 10 points, okay? 10 points is really tight, but let's just calculate a position, okay? This position size analysis, 2 contracts, okay? What if you have like a high conviction setup, strong edge, you can, if you do risk above 2%, it's more aggressive, but this is basically, you can do 5 contracts and you're risking $100, okay? Now, what I see is people risking actually more than 15%, but let's say you want to risk 15% of the account, you are in the account destruction zone. 15% risk is gambling, not trading. So 5 losing trades, 50% of your account is gone. 7 losing trades, account is likely destroyed. Because you're basically risking $300 per position. That's with a stop loss of 10 points. Okay. If your stop loss is more, then obviously, whoops, I don't know why I did that. just calculate your size. But what I do see though, I'm gonna. What I see when I get a lot of messages from whether it's members or community members and other traders, and they'll say I blew up my account. 90% of the time it's sizing. So I'll ask, okay, well, how big was your account? And they're like, oh, I was trading with, 3 NQs on a 50K account. Okay. Which is $2,000 drawdown. So basically, each position they were risking half of their account, and that's just being stopped at 10% or 10 points. If they don't have a stop loss, you can pretty much count your account gone. So the point is that most don't know how to size in, especially if you're using, prop firms. So even if you have a $50 or a $5,000, or 150K account, 3 contracts is, pretty big for that size. Okay, so even if you're doing a 5%, you should be sized in 1 contract or less. And 1 contract of NQ is 10 contracts of MNQ. So if you have MNQ, you can actually scale in and scale out. Scale out by 2 contracts or whatever it may be. Leave some runners, put your stop loss in profit, that kind of a thing. But this is what really this is how most continue to blow their accounts. I actually had a guy message me a few weeks ago, and he said, I've been trading for 6 months. I haven't, taken a payout, this and that. And so I asked him, what is he using? He wasn't managing properly. And I said, okay, go to micros. And a week and a half later, after that, he messages me and he says, I am taking my first payout. He passed his accounts, and the payout was, I think it was like $1,000, which is fine. It's not, I mean, you guys have to understand that most people work, with their jobs. They don't they don't earn more than $300 a day, if even that. So small progress is great. Small profits are great. It's more than you had yesterday. Don't let social media, what you see, with some of these big P&Ls, you're going to get there. It takes time. And obviously, their risk is going to be different than yours. So focus on sizing small 1 to 2 contracts. When you become consistent after, let's just say, I don't know, 2 weeks, 2 or 3 weeks, you are really consistent with 1 to 2 contracts of micros, then you can size in, 3 to 4 contracts. And then if that doesn't work, come back to what worked, because it takes time. And also, I always suggest you should have a hard stop loss, because at the end of the day, no matter what, especially if you're trading NASDAQ, we're going to get those candles that will kill your position. So either you have a stop loss where you know the risk, or the market's going to auto liquidate you. So it's kind of, I suppose, it's your choice. Let me go to the trading journal. So another thing you guys can do, again, all of this is free, is look at your trading journal. You can import everything in here, and view your analytics. This is a growth calculator. It looks like, so you got to understand the risk to reward ratio. So if you're risking $500 to make $1,000 per day, that's fine. Okay. With that ratio, you only need a 33% win rate to break even. Anything above that is profit. So your profits must exceed your risk. However, if you are risking $1,000 to make $200, that is not a good example. That's a pretty bad example of bad ratio. So here you can actually input like your starting balance, with your daily risk loss or limit losses, your kind of daily profit target, what your win rate is, and then just kind of see and calculate your growth. It's kind of an estimate. Another thing here is you guys have seen all these journals like TradeZilla, TradersThink, and all of that. This journal is an amazing one. This is free for 30 days, and then with actually going through this, you can get 3 free starter accounts forever. There's no credit card needed or anything like that, and continue to use the starter accounts for free. But it gives a lot of different. Let me just sign in. It's got like the dashboard or whatever, but it also has like market prep analytics. There's playbooks, trades, all sorts of things. You can import your history. You can connect to different accounts, such as like directly from Trade08. And I'm not sure if he said NinjaTrader is directly, but like from Project X. So there's a lot of ways you can. He's not on today, but I'll bring AJ on next time to kind of give you guys more of an explanation of that. And back to trading resources. So another thing, whenever I trade NASDAQ or whenever I'm trading futures, got to go through the trading economics calendar, Forex Factory, earnings to see if there's any earnings, check bar chart, Benzinga, Financial Juice, kind of, something that gives you real-time financial, market updates, things like that. You can also kind of scroll down here and gives you a different knowledge base. But another thing that I do is I have the Mag 7 up. So I've got Microsoft, Nvidia, Amazon, Google, Tesla, whatever it is. I watch those charts as I am also trading NASDAQ, so I can kind of gauge the sentiment of what's going on with, if Nvidia is strong and Microsoft is strong and I'm trying to short, that's not going to work. Or if Nvidia and Microsoft, are weak and I'm trying to long, it probably is not going to work. So you can kind of look at those as you're trading. Go back and show you guys. I was kind of hoping I was going to be done with this before the market closed, because I was going to execute some trades for you guys if you're brand new to kind of see how it works. But this here is Project X platform, and if we're going long, if we think the market's going to go up, you're going to buy market or join bid. If we think the market's coming down, you're going to sell market, join ask. Pretty easy. Your ticker is up here. There's a trade copy here on the left side. Project X is owned by TopStep. So a lot of firms are also going to be going away from Project X, as it's been having some issues lately. So kind of be cognitive of that. This here is NinjaTrader. I use NinjaTrader, and basically I can copy different prop firms, and I can also add third-party indicators. So like this right here, this is order flow footprint. You don't have to worry about this. 90% of traders don't use order flow footprint, but this kind of gives me more of an edge with my technical analysis. And if you're using Project X or if you're using Trade08, they don't allow third-party add-ons. And this right here is Trade08. So NinjaTrader owns Trade08. But same thing, if we're going long, it's buy market. If we're going short, sell market, sell ask. It's fairly self-explanatory. It's not rocket science by any means. Let me see. Yeah, the market already closed. Let me see if I can do a replay. Have any of you ever executed or like don't know how it works as far as okay, this is NQ. Let me just make sure. Okay, the regular candles. Let's just go to a minute chart. This is from today, so I just want to show you guys. Trade. Dom. Okay, so let's say we're trading at 25, 480.50. Notice how, this is the DOM, but notice how the spread is 0.50, 0.75, 0.00, 0.25. So when I said it moves in, 25 cents or quarter or 0.25, that's what it means. So let's say I wanted to do sell market. Today's probably not the best example, but just to give you guys, a little bit of. Okay, so this was, I don't know, 5 minutes or whatever, because these are 1 minute candles. So that there's, this is NQ, but let's say this is a pretty, maybe I should have gone over here, because each dollar that it moves or each handle, it's 20 bucks. But if we do MNQ, just the micros. Okay, same thing. Leave. I don't know, let's just go here. Trade. DOM. So 1. Okay, so let's just say we went short. Notice how it basically so yes, it's smaller, but this is how you manage risk. Okay, so when I talk about micros, it's 1/10 of risk of the mini size. Same thing, with ES and MES. ES moves in a $50 1-point move, so each dollar that it moves, it's 50 bucks. And each micro version or the MES, instead of 50 bucks, it's 5 bucks. So let's see. How many of you entered? Well, it doesn't tell me how many you entered, but let me go. Hang on. And then I'll ask for some questions. Or I'll ask you guys what questions you want me to go over. And okay. Well, there's 23 people that entered, I see. Quick draw. All right, let's see. Funded Futures Network. All right, I'll draw this in a little bit. Let me just make sure that you guys check the questions. Okay, so question. Can you please explain the static accounts? Oh, do you want me to go back and explain that, or? Yes. So when I got started trading futures 3+ years ago, I came from options. I used to trade, first I used to trade, I did some swing trading, and then I went into crypto, and then penny stocks and options. I feel like that's kind of the trade that a lot of people took, or the route. I did not have anyone to um, help pinpoint things, and I've been teaching futures basics for the past 3 years. And I've uh, a friend of mine, which he's in the server, Concord, he suggested this to me years ago, that um, gave me an idea that I should do a website where it kind of puts everything together. And to be quite honest, life got in the way, and I got lazy-ish, and I didn't put it together. And I wish I had, because I wish I had something where I can go to one place, and whether I'm learning about futures, whether I'm trading my own accounts, someone to teach me just the basics of it, the fundamentals of it, um, where I can I don't have to research different prop firms, or figure out which ones are legit. I will tell you guys, there are so many even big influencers that I see that are shilling big or firms that are not solvent. I will not, especially when they know that they're not solvent. And I go through researching the firms that I have on. It doesn't mean that you're uh, that there aren't issues at some point with with these firms, but I do my due diligence, and I also want you guys to go and do your own due diligence on different firms. And this is why, like, here I've actually listed, um, if you go to detailed analysis, if you actually go scroll below, I've vetted about 19, 20 firms. The featured firms are the ones that which is up here, featured, are the ones that I've fully vetted. And there's actually Alpha Trader is another one, but let's just say we go down here, comprehensive futures list. There's like uh, 70 to 80 big firms. Um, but I am not, you know, uh, I've never really heard of them. And even if some of them that I have heard, I will tell you, a lot of these firms have contacted me to uh, partner with them, and I've said no. So, because if something is too good to be true, it probably is. And I've seen a few firms over the past year that a lot of big influencers have been pushing that ended up rugging, like this one right here. They're in bankruptcy, they started rugging. Same thing with this one. Now, this firm here and this firm here, the CEOs, um, partnered up 2 months ago, and I spoke about it as well. They're opening up a new firm, by the way. So just because somebody's, shilling a whatever, and it's like they ran out of damn names, Blueberry, TikTok Trader, whatever the names are these days. I don't even, Zenit. I don't know. Just do your due diligence, no matter what. Anything can change, obviously, with with any prop firms. There's nothing that guarantees that they're going to be solvent tomorrow by any means. But try to stick with the ones that are fairly reputable within the industry. And like, some of them are backed by like by actual brokerages. So um, just kind of look at that. Yes, the premium membership. So we do have a where we're running, like if you um, use the code Minx, you guys can go up here and get access. If you're not in the Discord already, you can join our Discord. You'll get the freemium version of it or whatever. But you can go down here and just find your username and input it here and whatever the proverb you used, and select a file. So like just provide your receipt or verification showing the MINX, and you'll get 30 days of free to Traders Wealth Lounge, which has 5 analysts, 5 full-time analysts. I know that some even Discord owners aren't full-time traders, but they've got a Discord. But all of our analysts are full-time, and we've got seasoned traders or VIP traders that have pulled out, 7 digits out of prop firms that are also, with us. So, or on our team helping the rest of the members. So we've got seasoned members here, and you guys can get a free one if you use that. So it's up here where it says verify. And if you are a member, and if you do have you can submit, open up a ticket, and then we'll add 30 days for free for you. Oh, okay, so it was explained. Awesome. Yeah, thank you, AJ. All right, let me go to, nope, not that. Trying to find where I am streaming. There it is. Okay, let's see questions. Yeah. Thank you. Yes, I agree. Take time. Comparison is a thief of joy. Yes. So guys, stop trying to compare your journey to somebody else's, and stop trying to copy somebody's P&L or even like their plays. It's not going to work. Okay. Here's a few things. I see people say, well, if you're in a Discord and they're profitable or something, it doesn't matter. Why aren't you? Well, first of all, everybody has different risk tolerance. Second of all, a lot of times, even if you are trying to mimic a play, it's not going to always work. And especially if you're trying to do NASDAQ, because it moves really fast. So you have to kind of, nobody is 100%, nobody has 100% win rate. And if they say that they do, I can guarantee they're lying. So let's say even if it's 60 to 70%, you still need to have for your own account, risk management. If you're going in with, like I said, 2 or 3 NQs on a 2K port, 2 or 3 trades, you're going to be out. Whereas if somebody is using micros, they are going to be pulling money out. Because yes, is it going to take a little bit longer? Absolutely. Is it going to, are you going to have $5,000 days every day? Nope. More likely you're not. But it's the base hits the count. So, $200-300 a day is so achievable. And I know it might sound a little cliche, but don't try to compare yourself with someone that you see somebody with a 50K a day or whatever it is, because chances are that they have a 7, or unless they're gambling, that they have a 7-figure port. So if somebody's going in with 40 NQs, means that they have a pretty big port. That might mean the equivalent of you having 2 or 3 micros. So the best thing to do is just get consistent with small amount, and then so yeah. Okay, let's see. More questions. Slow and steady wins the race. Yep. Minx, can Canadians join your prop firms? Yeah. I mean, they're not my prop firms, but yes, most prop firms allow Canadians. You just want to, there is like, it'll say like a restricted list. I don't know. Let's go to like Tradeify or something. Tradeify.com. I don't know why I did that there, but oh, it's not .com, it's .co. I forgot. No. In the help center, you can click to see restricted countries. It would be funny if Canada was on here, to be quite honest. Sorry. But so these are like the completely restricted countries. Look, my country is restricted. Not where I was born. But yeah. Okay. Yes, this is going to be recorded on X, so you can actually go back through. And you can also go back to the website. Just go to the resource, Traders Resource or Educational Resource, and you can go back through that. What's the difference between buy market, join bid, and ask? So, okay. So bid is the highest price, someone is willing to buy at right now. So think of it like, I'll pay this much for, whatever you're trading, 26,000 for NQ, just to give you an example, 25,000, whatever. And the price, ask is the lowest price someone is willing to sell at the time. So I'll sell you for this much. So there's a little bit of a gap, like if the bid is 100 and let's say the ask is 100 0.05 or something, the spread is 5 cents. So market order is basically you're just saying, hey, I want in or out. Like I want to get in. And when I trade NASDAQ in the morning, like during the first 10 to 15 minutes, I always do market, because when you're buying with like a market order, I'm paying the ask price. So when I'm selling it, I get the bid price. So it's I'm paying just to get in immediately and get out immediately. So for example, okay, I'm trying to, let's say you are, you're doing market. Okay, so you buy market, you're going to get filled at the ask, and then you sell market right away, you're going to get filled at the bid. So technically you're going to be down, like if it's, let's just say there's $1 between the spread, you're going to be down a point from just the spread. Thanks, Fenster. Okay, any other questions you guys might have? Maybe I'm not the best at explaining things, but I don't see any. Any more questions? So let me draw a winner. You must be present. Isaiah H. Are you here? Okay, I'm gonna repick a winner. Okay, is it gonna repick a winner? Can be Isaiah again. No, okay, so now I gotta do this. Funded Futures Network. Oops. I know Fenster, you are. Maybe I should draw 3 or 4 people at a time. Ari N, or are you here? ERI. All right, there you go. Can you DM me on X so I can get this to you? All right, guys. Well, I don't see any other questions, and I will see you guys Monday. No more draws, but I can't keep drawing, guys. There's only so much that I have. The other day I drew more than I, was going to, but all right, guys. All right, thank you, Ari. Bye. Have a good weekend.